Hey, good afternoon, everyone. This is Chart Sniper again with a weekend review video of the markets. And last week was a very crazy pullback happened, and let's see what exactly is happening, at what levels the market is, and what is in line for the next week. So this is for the next week, 24th to 28th, last week of January. So let's get started by doing a deep dive in the markets and some indices and some stocks. Okay. So from SPY, when we look at SPY, and this is a daily chart, and what we are looking at is some kind of heavy pullback on a lot of volume and RSI at extremely oversold levels. Okay. Uh, the 200 days average that you are seeing, it sliced through that like a hot knife through the butter. So it came back all the way when we take this entire move. We came all the way to 78.6 retracement. Okay. So what it means is, the bearishness, whatever happened, is pretty strong. And from SPY perspective, we pulled back almost like close to 9.6%, and that keeps it in the category of a pullback. So if it is more than 10%, then that it gets into category of correction. Okay. So we are not in a bear market yet. We are not in a correction yet. It's just a pullback mode, and these oversold conditions needs to be neutralized a little bit, and we'll see what happens next week. So the way I see it, what is happening here when we take a long-term picture of it, I think that probably will be good to explain in QQQ. So this is a daily chart, 200 days MA breakthrough, breakdown happened. Let's go and look at weekly and how it's looking. On weekly chart, it pulled back. It's very close to the 50 weeks average, and the 50 weeks average is sitting at 434. That's probably 4 points away, I would say. So I think it would prefer to touch that 50 weeks average and then make a decision on what exactly to do now. Okay. So a 50 weeks average touch and then bounce back to neutralize these levels, these oversold levels, and then it will decide what exactly it wants to do next. And from monthly perspective, we clearly lost the 5 and 8 weeks averages, and middle Bollinger, which is 20 weeks average, is somewhere at around 400-ish, which is around 37 points down. So that will be another 10%, I would say. So that's where it stands. It's not the end of the world. Last time this happened, it was in March of 2020. I don't think we are in those kind of COVID situations, right? So hopefully the next month, like February, it bounces back and regains this 5 months average and 8 months average. Okay. On weekly, this is very strong uptrend of 50 weeks average, and it is touching that 50 weeks average after June of 2020. Okay. So yeah, so as you could see here, what happened, let me go back. If you can see, there was a big down move to 50 weeks average, and then the next month, it kind of bounced back all the way and did some sideways consolidation. So hopefully that is what happens here. When we look at weekly, what we are looking at is, if you see the curve of that 5 period average, 5 weeks average, it probably will be somewhere here at around 450 levels. So we'll see a bounce back after touching this one to 450 levels, and then it makes a decision after that time. Okay. So when it is moving down heavily, you can always expect to see some sharp ranges, like heavy ranges, like it can start to bounce back, and everybody who bought puts or like who are doing short, they'll get into panic mode, and it actually pushes quite significantly, like 1% or 2% upward pretty fast on a day, so that to those people can be knocked off from their positions, and then it starts slowly going down again. But again, at a very high level, what I would like to mention you is, as is the case when the market is bullish, when the on a weekly, if the price moves above 5 weeks average and stays above that 5 weeks average, it is bullish, right? So in the same way, when the price moves down below 5 weeks average, it can always retest that 5 weeks average and keeps on following it downward. Okay, so as long as it is closing on a weekly basis below 5 weeks average, the downtrend keeps continuing. There is no reason for you to expect any bullishness out of it uh, while it is staying below the 5 weeks average. Okay, so that's what I would like you to focus on to keep be on the right side of the trade. And let's look at QQQ. I have some kind of theories there where I could explain some things here. I think this is a left shoulder forming, and this is a big head, and there is potentially a right shoulder that forms, but in QQQ it can be more clearly explained. Okay, so let's look at QQQ. What is happening on a daily time frame? It it lost the 200 days average. Okay, it kind of went down significantly. When we look at volume, it has been on a daily basis, it has been a consistent increasing selling volume. Okay, whenever we see this kind of 146 millions that happened towards the end of March 2021. Okay, but that's kind of a very big selling volume. So my thesis, let me actually take this back. My thesis on this kind of structure or formation is, there is something like a distribution and accumulation. So let me bring that chart. So what you are looking at is the accumulation and distribution phases. So what happens is, there will be a lot of accumulation happening at certain levels, and once it breaks out, there will be a markup phase, and it might be 2 waves or 3 waves, and there will be a significant markup. If a big players who accumulated here, if they bought it for $100, then they will try to kind of add a lot of stocks as part of this markup phase to make it to $200. And now, because they own a lot of these values and they are sitting at 100% profit, they would like to kind of distribute that one to others. Okay, so they would like to sell around 200, making 100% profit. And if they start selling everything in one go, it kind of drops pretty fast. So that's why they would like to keep it afloat for a long time, and make it appear as if it is breaking out, but it never breaks out because that is in a clear distribution pattern. So once they kind of get those some of the stocks that they have at profit at 200, there is no reason for them to buy back at the same price and continue it higher, right? So what they will do is they will start a forced mark down phase. So marking down is the market suddenly starts falling. There is no reason. I mean, any reason that's happening could be used as a valid reason for a kind of pullback. But as part of this markdown, they accumulated 100, they distributed at 200, they will mark down forcefully, and then start the reaccumulation somewhere around here. If the stock is in uptrend, typically the next reaccumulation phase happens above this level. Okay, so that is the typical phase of the market. So my thesis is, it looks very similar to kind of that. If you can see this guy, let me see. So this looks like a forced markdown. If you can see, this move up happened, this move happened, and then there is a clear distribution as if it's about to break out, as if it's about to break out again. If you can see this spike here, that is this spike. You see the next spike here, that is that spike, and then they are doing the forced markdown. Okay, so this is pretty common, and I think what is happening here is like, if I can draw a vertical timeline. this is the new year, right? So they have made humongous profits in the entire 2020, right? Okay. So when we go back and give it another extra year time frame, let me plot that here too. So if you're looking at the amount of profit that they made in the last 2 years, a lot of profit from here to there. Okay, so they did not want to sell all these technology stocks or high growth stock. They wanted to keep those profits. They did not want to pay taxes in December 2021. So this sell-off that you see was, some tax changes coming, taxes increasing into the next year. But what my perspective is, they were sitting and they did not want to pay taxes on all those profits, so they just took it to the maximum profits into the new year and then started dumping it. Okay. So what happens now is they booked profits on this one, and they don't need to pay taxes on that profit for the entire year or maybe until next year, March, right? So or this year itself. So they have that entire year to make that to use that tax delayed tax payment to kind of make more money out of the market. Okay, that probably is happening. A mass sell-off is happening, and this marks the completion of probably potential completion of the markdown phase, hopefully. So the other point that I would like to make is, as I was trying to plot, this looks like a left shoulder, a big left shoulder, which happened from July to October, and then this is like it looks like a big head. Now that it came back to the same levels, there might be a bounce on the right shoulder. Of course, that right shoulder has to be less than this one. So we are not looking at probably going back anything above 380. If we kind of stick to that pattern forming, and we will be kind of seeing that it slowly kind of starts bounce back here from oversold levels, and it starts to die again here. That is when you could see probably in February or March, towards March beginning, that's when you can see more drop down if the overall market wants to go down, right? But looking for a short-term bounce here to form that right shoulder. So that being said, let's look at how exactly it is looking, how worse it is looking. So this is on a daily, and unlike SPY, which only down close to 10%, QQQ actually lost 16%. So that puts it in the correction phase. And on a weekly, what exactly happening is it lost the 50 weeks average, and there is a lot of gap for it to go down, but if it can quickly bounce back above the 50 weeks average, everything comes back to normal. And when we go and look at monthly chart, the monthly chart 328 is at around the 20 weeks average, and it will be another 10% correction, right? $30 down, is it? $20 down. So probably we are looking at um, around 50%, sorry, 5% correction from here. So we have to wait and see how everything turns out. So from IWM perspective, it already touched the 20 months average. Okay, and it closed below that. From weekly perspective, it's almost touching the 100 weeks average. It broke down this entire 1 year of consolidation and is starting moving down. And when you take the context of the entire move that happened from March 2020, this pullback is not doesn't seem that big. Okay, so we might see that 100 weeks average touch below the 200 mark. There is some support at 195ish. So we have to really wait and see that. And as you could see in all the indices, the sell-off is happening on a weekly at a very increasing volume. So that's kind of probably what it looks like. It downs almost 25%. So it's in bear market territory in the IWM. So when we go and look at Dow Jones, it joined the party. It looks a little bit between IWM and QQQ, I would say. It lost the 50 weeks average too. So overall, when you can see, but the sell volume is kind of decreasing. So only 7.84% pullback from all-time highs, better than actually SPY. So this is a strong index, and some of the stocks that are there in here probably might be a good buy the dip opportunity there. Okay. Again, we see a kind of a pattern where it's trying to form that right shoulder. It might try to form that right shoulder and then make a decision on what exactly to do. Okay. And one other thesis is it could be that when these positioning happens. Okay. So the January expiration typically, when we look at it, what are the levels in the beginning of 2021, right? So if I take those levels and then a lot of positioning happens in 2020 January about 2022 January. Okay, so 1 year ahead. For example, now if you want to buy very long-term options, you'll go and buy 2023 January options. Okay, so a lot of positioning happened into the expiration that just finished January 21st monthly expiration, and I think they are trying to kind of by this pullback, they are trying to bring it very close to those levels of January so that they don't need to kind of pay a lot of premium for profits. If there were some people were positioned in 2021 for more downside move, like they bought puts or something like that. By making this pullback into January, so then they are not paying much on that contract. So that could be another thesis why they pull back right away from open into the Jan 21st expiration. So it's it's good in one way. I mean, what I mean by that is, let me get the study. So when we look at this thing, what you're seeing is there is a continuous phase of uh, heavy bounce and then pullback, right? So every pullback that happens in the market, the next leg higher would make it would give us decent profits. Okay, so for example here there was a 9% pullback, but then from the 9% loss, from that levels it made 26%, right, profit. So 8% pullback, and then it made close to 30% from 30% from these lows, right? So this, if you take long-term perspective, then this pullback is an opportunity where you have some decent returns out of it. Okay, whenever it makes a new leg higher, so I would see a constructiveness of this pullback in that way. But again, I can understand if you were positioned heavily into the market at these levels and you're trapped, then you're feeling a lot of pain. And the good way to avoid that kind of pain is when we go and do that, 5 weeks average or 5 days average, more precisely. So the when did it start losing that 5 days average? Exactly here, correct? Jan 4th. So if you come out of the market or a lot of your positions, growth positions, when it lost the 5 and 8 there, then you could have avoided this entire thing. So it's important to look for you to look at where exactly the market is doing the QQQ or SPY, and as soon as it loses that 5 and 8 days averages, that's when you become very tactical and reduce your position size, account size, number of long positions that you have, and then wait what exactly it does at 20 days average or 50 days average. And yeah, so that was the date. Jan 4th was the date for you to be cautious. It not only lost 8 and 5, it also kind of moved below the 20 days average. Okay, So there you could have got out and then wait patiently to see where exactly it will bounce. As of now, we do not see any um, bounce situation here. So that is a way to avoid getting into these kind of things. And again, you don't need to trade every day, but when you are trading aggressively, make sure you're looking at some of the indices and their relative position to the averages so that you can avoid a lot of pain like this. Okay. But if you have cash on sidelines or if you're putting more cash into that one, I would like it to kind of probably hit some support levels here or see show some strength by closing above that 50 weeks average of 358, and then you could probably enter some positions to make that big profit gain. Okay. Again, if this is a right shoulder pattern, it would not go below above this one. So that's I would want you to be cautious on that one. And also these kind of markets, it's very difficult to make a swing trade unless you are playing or getting into the stock for 2 years, 3 years time frame or 1 year time frame. But keep it to the day trades, keep it to very quick trades. If you see profit, try to book it and then think later whether you would like to get in again or not. Okay, so this is kind of a quick day trading market. More of a not a swing trading market. Okay. So with that being said, we looked at a very high level. All the supports are broken, and typically in no man's land. And we also looked at some of the reasons why this could be happening. Fed with potential increase in interest rates, and all these things are being considered. Market is always forward looking. What it means is it is preparing for the worst case possibility from the Fed and the interest rates hike right now. But if it turns out to be not that worst anymore, instead of four interest rate hikes, if it's going to be only two interest rate hikes, whenever it hears that possibility, uh, I thought it's going to be worse, but it's not that worse anymore. Then you'll see that bounce happening and market trying to kind of bounce back from these levels. Okay, this is forward looking. Probably this adjustment and these levels are more 2 3 months to 4 months into the future. What is going to happen? Okay, and yeah, so keep an eye on what Fed says. We have a meeting probably I think later this month. Uh, so hopefully something a little bit dovishness come out of that. With that being said, let's quickly look at some of the stocks. Let's start with Apple. Apple down 12% from all-time highs, and yeah, I mean it's trying to kind of test the 200 days average. Earnings are on 127, so we have to see what exactly is they're going to say about their outlook. Netflix did not give a positive guidance and on the subscription growth, so it was kind of sold very heavily. Again, when we are looking at it, we have this long-term support, and if it wants to really pull back, it can pull back that all that 50 weeks average at around 145. So that would be a decent level of support. And if it wants to bounce, it can bounce back here, but I highly um, doubt that. Okay, but if it goes below that 158 level, then 143 comes very quickly, and that probably uh, looks like a stronger support. Okay, Google. So Google on weekly, very similar to SPY, 15 point. I mean, it's about to touch the 50 weeks average, right? So that's what I meant in the similarity between the SPY. So we are looking at 2570. I hope it holds and bounces back. Earnings on February 1st. And on daily level, did it lose some major averages? Yeah, I think it's in the no man's land now with 20. With yeah, I think there is a lot of gap, I would say, to the 20 sorry, this I'm looking at monthly, right? So on daily, it lost the 200 days average. So I would say whenever you see any stock below 200 days average, it's a no touch. So wait at least until it moves back about 200 and then make a decision whether to buy or not. Okay, that level is around 2666, and in case of Apple, it is above all those averages. So probably that would be the best bet in these stocks. Okay, so next look at let's look at Microsoft. It pulled back 18% and it's very close to 200 days average. Some news probably regarding their acquisition of Activision, right? So, but overall, it's looking very similar to the SPY and then 200 days average. Hopefully that supports. Okay, so Microsoft touches 200, Google touches its 50 weeks average, and yeah, so we have to wait and see what exactly how happens. And when did it touch the 200? I think it's been a long time, not in the last. It was as part of the COVID pullback. Okay, so it touched the 200 and went a little bit down. Okay, so if you believe the cloud story and the profits that they're going to get, then probably this is a good level to kind of buy. A lot of people would have been buying Microsoft here, but that should be okay. Uh, but especially when it comes to these levels, and if you are thinking from a long-term perspective, these are some good opportunities to kind of buy and accumulate it over time. Facebook. So Facebook looks probably worst among those FANG stocks, and it lost the 200 days average. There is nothing on daily that shows, it's kind of due for a bounce. Let's go and look at some long-term perspective. The 100 days, 100 weeks average is at 284. When we talk about 100 weeks average, we are talking about average of 2 years, 2 years average, right? So it's better to be cautious, very bearish, and then there was this big down move and there was some consolidation. It can make a similar kind of down move again from these levels. So probably 285 level is where you could go and visit it um, for an opportunity than here. Okay, so Amazon. So we are looking at weekly again. Amazon 100 weeks average. Sorry, this one was 100 weeks, and this is probably 150, right? Yeah. So we are looking at some 150 weeks average, and we are looking at overall 2700 as a support zone. If it comes to that level, then it could bounce, but a very, very strong consolidation and then coming out of that range. So 2700 and then 2400, 2450 is the kind of major support. And again, if you're not in it, this is not a good time to buy. At least wait until some support is hit, which is like 2700ish. Okay, and it's in 32% down from the all-time highs. Okay, NVDA very strong pullback on weekly from 200, sorry, 20 weeks average, and we have support at around 210ish, the 50 week support. On a daily, it is very close to the 200 days average test. So some more pullback possible on all these things, even including indices, and then probably a bounce could happen. And it's down 48%. Wow. So it down significantly, and yeah, it's in a market crash mode. So I think it will touch the 220 level and then decide. Last time when it touched the 220 level, always it was a bounce opportunity. So if you believe in that story of NVDA, yes, you can make the decision there at 220. AMD is looking a little bit better. at 150 days average, and 108 is the level that there was a lot of consolidation that happened here, so probably it will hold around at 108 level. So it's in 38% down. So a lot of value loss in some of these stocks. So you probably should be in a let me see what exactly is strong and what I would like to be in my portfolio for the next 1 year after these kind of pullbacks. Okay. So I think we ran out of time. It's close to 30 minutes. So I hope that was helpful. Again, probably a little bit down move is quite possible in some of these stocks, but most of them are at a very good long-term support zone. So if that selling in January is finished, profit booking is finished, and then uh, there could be a bounce, smaller bounce to these averages that are moving downward. And then once they bounce, then there will be a decision made what exactly to happen, whether it wants to kind of turn more bearish into the rest of the year or turn bullish and then make new all-time highs. So we have to wait and see based on that. A little bit more stimulus things from the government, or less hawkish Fed might help this market overall. So let's wait and see what exactly happens next year. So before I leave, let's quickly look at crypto, what exactly it is doing and where exactly it is from long-term perspectives. So what I had here was a channel from that level to this level, and it broke that middle of the channel. And so typically the price target of that one is twice the channel height. So I think it hit that level now. So we have to wait and see what exactly it does. Um, it's 88% down from its all-time high, and it's coming back to these kind of levels. So when we go and look at what happened from March of 2020, this is nothing, right? So hopefully this could be a big cup, this could be a big handle, or it could be that this left shoulder, head, and right shoulder formed here mildly, and then it's kind of pushing down, right? But overall, the implied move from this pattern break is completed now. So hopefully there will be a bounce from here. Ethereum. So we see this long-term channel. Whatever move that happened, so that seems to be like 2300-ish probably is a decent support for this one. And yeah, I think that probably should hold on a weekly time frame. Let's go and see. Yeah, if you go to 2300 level, that could be a good buying opportunities. Okay. So again, this is following the overall market, overall sell-off, and again, as the market finds some footholds and then starts bouncing back, these also will um, bounce back. Okay, so very big down moves, and if you missed playing these things to the upside, probably um, you have some buy orders around the 2300-ish levels and forget about it. Same thing with overall SPY also. You don't need to kind of keep on watching it whenever it hits those major support levels from weekly averages perspective. You just have that order in place. Okay, buy a few of them at 430-ish, 430 level or 430 level, and then if it moves down further, buy few of them at 400 level. So those kind of orders you can keep playing. And if you went through a lot of pain by betting on the individual stocks, after this much pullback, betting in the overall market is not a bad idea. It's a good idea actually. So if you are not good at stock picking, then you can buy the entire basket of top 500 stocks using SPY or probably tech stocks using QQQ. Okay. So with that, let's conclude this meeting. And again, let's quickly look at VIX, what exactly it is doing. So it kind of, we see that spike, right? So let's go and see. And so when we see that very long-term downtrend line, we have a little bit more room for it to go, and that probably coincides with uh, further pullback to test those major levels in the market, right? And then probably it fades off there. And from SKEW perspective, we are looking at this is comparatively lower, so it's not overbought anymore. And yeah, this says we might see that there's not much panic from here into the future, so we might see a bounce in the market. And put call ratios finally. Yeah, so we see that mark above 1, that shows that extreme extreme levels, right? Extreme fear and also put buying. So whenever that happens, what it means is a lot of people are holding insurance or puts. So typically when that happens, they will try to take the market higher so that it can come back, and all those people who bought puts or insurances, they will all the premiums will be squeezed out of them. Okay. So there are a couple of good signs, probably, that there might be a near-term bottom here in the markets. From the put calls perspective, it seems that way. It's kind of at a very high levels, which can trigger market for a bounce to happen. Okay, so that's pretty much it. One last thing that I would like to look at is the tick, and I think it recently made a lowest tick. What was that? At minus 1500. Let me go back to daily. A consistent below 1000 ticks. Okay, that's not normal. Okay, a consistent below 1000 ticks happening. So I think this all shows how extremely oversold that we are, and possible bounce from here is quite possible. Okay, so with that, let's conclude this session. Thank you very much for joining in. Be in the lookout to kind of buy some long-term stocks. Yeah, again, we are going to see a bounce, but it will not be a bigger bounce than what happened in the last time, because the market still have to kind of come out of those uh, bearish conditions set up, like moving averages pointing downward, right? So hope that was helpful. See you in the next weekend review meeting. Stay green and be cautious in these markets. Thank you.